Hello friends. Friends, in the last lecture, we started with company accounts, right? So I told you that there are various ways of doing business. Like earlier we did partnership accounting and now we are doing company accounts. In company accounts, I told you we discussed the difference between partnership, doing business in a partnership, and doing business as a company. We discussed the difference. One major difference in that was that in company, right, when we talk of company, the people who have decided to start the company, they do not have the money of theirs, right? People who have decided to start the business as a company, they do not invest their own money. What they do is they ask money from outsiders. Clear? People who have decided to start the business as a company, they will ask money from the outsiders. They ask outside people to invest in their business. Clear? They do not have the money of theirs. They ask money from the outsiders, and in return, what will they do? They will issue receipts for money received. Clear? This much we discussed in the last lecture. Again, I told you that in company accounts we are going to discuss basically two things. One is share capital and the other thing is debentures. These are majorly the two things that we are going to discuss when we talk of company accounts. Clear? Now in this lecture we are going to start with share capital. Right? Now what is share capital? How we treat share capital? Right? We are going to discuss now. Remember this basic thing that in company we ask money from outsiders and we issue receipts for the money received. Right? This is absolutely a layman language, right? This is not given in any law. It is not given in the Companies Act 2013. It is just a layman language. I will correlate this with share capital. So remember this, okay? So we are going to start with share capital. Clear? Now, I'll take a very simple example from our daily life, right, to relate with this. You are a student, right? You require some money to buy notebooks. You require money to buy notebooks. Clear? You are a student, you are not earning, so you don't have money of yours. So what will you do? You will ask your father for the money, isn't it? You will ask your father, here is your father, this is you. What you will do is you will ask for rupees 1000. Clear? You are a student, you require money to buy notebooks, but as you are not earning, you are a student, so you don't have your money. What will you do? You will ask your father for rupees 1000 that is required to buy notebooks. Clear? Now, you also say to your father that give me this 1000 rupees in 10 rupee notes. You ask your father to give rupees 1000 in rupee 10 notes. So, how many notes your father require to give you 1000 rupees? 100 notes at the rate of 10 per note, isn't it? This will be 1000 rupees. This much clear? This much example is clear, friends. You ask your father for the 1000 rupees and you ask your father to give those 1000 rupees in rupees 10 notes. You want the change of those 1000 rupees. You don't want 500 notes, right? You don't want 100 notes. You want it in rupees 10 notes. Clear? Okay, your father agreed to it and your father pays you, gives you 100 notes at the rate of 10 per note. Now, your father gives you 100 notes of rupees 10 each. How many notes? 1000. Clear? Now what you do, you issue 100 receipts of rupees 10 each to your father. This looks funny, but I am just taking a hypothetical situation, right? Tomorrow do not go to your father and start issuing the receipts, okay? So this is just a hypothetical situation to explain you the topic, right? So what you do is, your father gives you 100 notes of rupees 10 each, that is 1000 rupees, and what you do is, you issue 100 receipts of rupees 10 each to your father. You say, I have receipts of rupees 10 only. So I will issue 100 receipts to you because I have received 1000 rupees from you. Clear? Is this example clear this much, friends? I'll explain it again, that you require money to buy notebooks. You require 1000 rupees to buy the notebooks. Now you are a student, right? So that's why you don't have your own money. You go to your father, you ask for rupees 1000, right? And you also say, give me 1000 rupees in rupee 10 notes, right? Don't give me 100 rupee note. Don't give me a 500 rupee note. Just give me 10 rupee note. So how many notes are required? 100 notes of 10 rupee per note. Okay, your father agrees to it. Your father gives you 100 notes of rupees 10 each, that is 1000 rupees, and what you do is, you issue 100 receipts of rupees 10 each to your father. For every note, you issue a receipt. Right? Clear, friends? Now, coming back to the business situation, here is a company. Right? That means the persons who have decided to start the business. Okay, I won't say company. This will confuse you a bit. Right? Okay, I say, here we have persons want to start business as company. Now, the very basic condition when we are starting the business as a company, I told you that these person don't have money. What they do? They ask money from whom? From outsiders. Right? They will ask money from outsiders and outsiders will pay them money. Can you relate this situation? You are the person who wants to start business as a company. You don't have the money of yours. You ask your father for the money and your father agrees to pay you money. Same is the situation. Here we have a group of persons who want to start business as a company, and these persons don't have the money of theirs. So they ask money from the outsiders. Outsiders is your father, right? And your father agrees to pay you the money. Simple. Clear? Now, what will these persons do? They will issue receipts. They will issue receipts for money received. And what they say is, they also ask the outsiders that pay us the money in rupee 10 notes. Ask money in rupees 10 notes. Clear? So if they require 1000 rupees, how much notes they want? 100 notes. Right? They are asking outsiders to give 100 notes at the rate of rupees 10 each. Clear? There is a group of persons who want to start business. These persons don't have the money of theirs. Clear? So they are asking money from the outsiders, and they ask outsiders to pay the money in rupees 10 notes. Right? So if they need 1000 rupees, they are asking outsiders to pay 1000 rupees as 100 notes of rupees 10 each. Clear? Now what they are doing is, outsiders will pay them 100 notes of rupees 10 each, and they will issue receipts for money received. What they will do is, they will issue 100 receipts, right, of rupees 10 each. Each receipt is having a value of rupees 10, and they are issuing 100 receipts of rupees 10 each to the outsiders who have decided to give money to the business. Is this much clear, friends? Just look at this chart. Is this much clear? Right? You are asking money from the outsiders. You have divided the money required into small units. You say, you give us the money in 10 rupee notes, you give us the money in 100 rupee notes or 500 rupee notes. This is what I have done. So on the basis of that, I have calculated how many notes are required. Right? And equivalent to those notes, we will issue those much receipts. Right? If we are receiving the money in rupees 10, then we need 100 notes of rupees 10 each. 1000 rupees, you will issue 100 receipts of rupees 10 each. Clear? Now I am going to relate this thing with share capital. This person who wants to start the business as company, a group of persons, they don't have the money. They are asking money from the outsiders, and outsiders are paying them. Right? What they are doing is asking outsiders, we can say asking to buy receipts. The receipts here are called shares. Shares in company. What we are doing, we are having the receipts of rupees 10 each, right? We are asking the outsiders to give us the money, and from that money you take these receipts. Basically what they are doing, they are buying the receipts, right? They are buying the receipts, they are giving us the money, they are buying the receipts. So we are asking the outsiders to buy receipts. And then I say, I will replace this term receipts with shares. I am asking the outsiders to buy the shares of my company. Clear? Then what will happen? Outsiders will pay me. Outsiders will pay me amount. Right? This amount is called my share capital. Because this money, why it is called capital? Because this money I will be using to run the business, to start the business. This is my capital, right? Then what will I do? I will issue 100 receipts of rupees 10 each. I told you I will replace the word receipt with shares. So what is the language? I will issue 100 shares of rupees 10 each. I have divided my capital into smaller denominations. It can be either 10 rupees, 100 rupees, 1000 rupees, right? And on the basis of that, I will calculate how many shares are there or how many receipts, how many notes I require and how many receipts I will be issuing. I will issue 100 receipts of rupees 10 each because I have asked them to give me the money in rupees 10. What is this rupees 10 called? This is the value of one receipt. This rupees 10 is the value of one receipt, isn't it? Because I am issuing 100 receipts of rupees 10 each. What is the value of one receipt? Rupees 10. Here I replace this word with share. So this rupee 10 is what we call it as face value of one share. Clear, friends? So are you clear what are the shares? How we issue shares, how we ask money from the outsiders. What is the face value of share? What is a share? It is the receipt that we give to the people from whom we are taking money to run the business. We don't have the money. We ask outsiders for the money and we give a condition that pay us the money in rupee 10 notes. Like you tell your father, give me 1000 rupees in rupee 10 notes. That 10 rupee is the value of one share. It is the face value of one share. You are issuing 100 receipts. You are issuing 100 receipts of rupees 10 each. For every note, you are issuing the receipt. This receipt is your share. That means you are issuing 100 shares of rupees 10 each. What is the value of one share? Value of one share is rupees 10 and you are giving 100 shares to a person. That means that person is paying you 1000 rupees. Let's see. Let's take a simple example. You are company X. This is an outsider, person Y. Right? So you issue 100 shares. You issue 100 receipts of rupees 10 each. What is the value? 1000. That means this Y person is paying you 1000 rupees in 10 rupee notes. That is, he is paying you. Y is paying you 1000 rupees in rupee 10 notes. Right? That means he is giving you 100 notes of rupee 10 each. What you are doing is you are issuing 100 receipts of 10 each. That means he is paying you 1000 rupees in rupee 10 each. Clear this much? So friends, this is how we issue the shares. This is how we deal with shares when we talk of company. Why it is called, we call it as share capital, because this money we are going to use for running the business, and in this money there is a share of so many people. Clear? So you issue 100 shares of rupees 10 each. I hope with this example you are clear with the fund of share, that how, what is a share, how it is issued, how it is divided into smaller denominations of rupees 10 or rupees 100. This is what you are asking from your father, that just give us 100 notes of rupees 10 each note. Clear? That's why I've taken this realistic example. Remember this example, because this example only I am going to use it in further classes. When I am going to divide this face value also, right, I am going to use this example. So be very careful with this example, right? Remember this example. Keep it in your head. Then you will remember what is here, what is the face value of a share, right? You are giving 100 receipts. 100 receipts means 100 shares you are giving of rupees 10 each, and according to that you are receiving 1000 rupees. Right? Clear? This much clear, friends? Now you may ask that, sir, why the outsiders will invest in your company? Why outsiders will invest in your company? See, although we are starting a new business, right, but there are people who know me as a person, who know my reputation, right, and they have a belief in me that if I start this business, it will grow at a very good rate. It will grow at a very good rate, right? And those people have some extra money lying with them. They want to invest that extra money, right? Then why are they investing in my business? Will they get anything in return? See, if we are issuing the shares, we are taking the money from outsiders. It is their personal money. It is like we are taking loan from the bank. We are taking loan from outsiders, right? What I say is taking money from outsiders, or I can say it as issue of shares. I can say it as issue of shares. I am issuing the receipts, taking money, is equal to taking loan from bank. Now, when you take a loan from bank, can you tell me you have to pay interest on bank, pay interest at a fixed rate, isn't it? Now, this is, if I say this taking money from outsiders is equivalent to taking loan from the bank, then will I have to pay interest to the outsiders also? It is their money. I am using their money to run my business. I will have to pay something to them. It is their investment in my business. I am using their money in my business to earn profits. So obviously they will want some share in the profits in return, because it is their money which I am using, and using that money I am earning profits. So in case of shares, this interest is called as dividend paid to shareholders. Now, at what rate this dividend is to be paid, and whether it is fixed, whether it is a flexible rate, this all we will discuss in the further lectures, right? This much you need to keep in mind, that taking money from outsiders is just like taking loan from the bank, right? What is the interest of outsiders? They have the belief that my business will earn higher profits, and on those profits I will pay them dividend. right? They will earn interest. They are having some extra money. They invested in my business with the belief that my business will grow at a very good rate. I will earn very good profits in future, and they will get interest on that money. That interest is known as dividend in case of shares. Clear, friends? So this very basic concept of shares is clear. How we issue shares, how these are divided. If I say I issue 100 shares of rupees 10 each, that means I am giving you 100 receipts and the value of each receipt is rupees 10. Right? That means how much money I have taken from you. If I am issuing you 100 receipts of rupees 10 each, that means I am taking 1000 rupees from you, and I have divided those 1000 rupees and issue you 100 receipts of rupees 10 each. That 10 is the face value of one share. Clear? I hope the very basic concept of share capital is clear to you. Right, friends? Clear? So, if you have any doubts related to this, just send me an email, or any topic even. Just send me an email at ksjteaching@gmail.com. Clear? So in the next lecture, we'll continue with share capital. Right? We will continue with share capital. We'll be discussing about types of share capital. Right? Types of shares we are going to discuss. So we'll continue with share capital in the next lecture also. Clear, friends? So that's all for this lecture, friends. Thank you so much.